Hi, my name's Nigel Hudson. I'm an enterprise coach with Clown Enterprise here in North Derbyshire. This video you're about to watch is for anyone who's making a tax return as a self-employed person for the year 2019 to 2020. In a moment, we'll start a PowerPoint set of slides to take you through the process of completing your tax return. At the end of it, if you've got any queries, there'll be contact details so you can get in touch with us. So the first step is that you need to make sure that you're registered as self-employed with HMRC. Sometimes they refer to this as registering for self-assessment, but it really means the same thing. You'll see in the middle of the slide there a link to the HMRC website where you can register. And it's important to do this as soon as possible because it is a couple of steps in the process, so it does take a little time, at the end of which they'll send you a unique taxpayer reference or UTR and an activation code to help you make your tax return. HMRC publish copies of the tax return on their website. And as we'll find out later, you can also do your return online. Now, a lot of the paperwork, both the returns, and we'll be talking about the main return that you have to fill in, and the supplementary pages you need to do if you're self-employed, along with lots of guidance, are available on their website, but we've also brought them together on our own site at clown-enterprise.info. Again, the link's there on the slide. As I mentioned, there are two ways of doing your tax return. One is to do it online, which is what government tends to prefer these days, and you may find that that's quicker and easier if you're happy using a computer and working online. But for most of this presentation, we're going to go through the paper version because it means we can cover every question that you could meet along the way of doing your return. As we'll see in a minute, when you do the online one, they tailor the questions they ask you to fit your circumstances. So some of the questions we're going to cover might not pop up when you do the online return. An important point is to note the deadline dates that you need to make sure you keep to. If you're doing the paper return, you've got to have it in with HMRC by the end of October. If you do it online, you've got until the end of January next year, but don't leave it that long. The end of January is also the date for making payments, so you really need to have your return in before then. So that you can make those payments if necessary. There's nothing to lose by doing your tax return early. So when you've got the time, get round, get it done, and get it out of the way. I mentioned about the documents that HMRC offer on their website. There are also a lot of webinars, and from those, videos that you can find on their YouTube channel. I mentioned already that when you do the online return, they will tailor it to suit your circumstances. And if you want to see what that might look like, you can break off now and have a look at the video that we've put in bold towards the bottom of the page that's all about tailoring the return. That particular video, by the way, was a year out of date when we put the link in. So don't worry if the dates don't just chime with what we're doing here. We're looking at a tax return in 2020 for the tax year starting in 2019 and ending on the 5th of April in 2020. So before you start, it's useful to pull some things together. If you're doing the paper return, make sure you've got that unique taxpayer reference and your national insurance number at hand. You'll need to put them on the form, and we'll see where in a moment. The two key figures that you'll need to enter when you come onto your self-employment return are what's called turnover, and that's all the money that's come into your business over the year. So that might be things you've sold, fees from clients for services you've provided, and so on. And against that, you want to log the expenses that you've had in your business. Now, you'll also need to tell HMRC about any other sorts of income that you've got. That might be things like pensions and benefits, if there's interest on savings, or if you've had a part-time job as well as your self-employment, a P60 to tell them about the tax and national insurance from that employment. When you come to do the return, there are two parts: a main return, which everybody has to fill in, which is 8 common pages. But as you see when we work through it, a lot of the questions you'll be leaving blank. And then for every source of income, you have to fill in pages, what are called supplementary pages, for each of those sources. And in this video, we'll be looking just at the 2 pages you need to complete for self-employment. So here we are, we're at page 1 of the main return. And as I mentioned earlier, at the top of the page, you need to write in your unique taxpayer reference, the UTR, and the NINO, your national insurance number. The next item over to the right is what's labelled the issue address. It's a bit confusing, but this means your address, the address for your business, or if you're working from home, your home address. And then to the left, you put in the HMRC address, and you'll see that on the slide there. Then towards the bottom of the form, give them your date of birth and your phone number in case they've got any queries. The second page is where, on the hard copy version, you do the tailoring of your return. You tell HMRC about the different sources of income that you've got. So in our example, we're just going to be putting a cross in 2 boxes here. One for self-employment, a cross against yes in section 2. And because we've got supplementary pages, we'll be putting a cross in the very last box on the page towards the bottom right. In our example, we'd be putting a cross in the no boxes for everything else, but just check. If you have got income from other sources, and particularly an obvious one would be part-time employment, then you need to put a cross in the yes box for those other sources of income as well. Page 3 is all about, first of all, interest that you've had. The big point to take away here is that ISAs are not taxable. So you don't have to put on your form the interest that you've received in an ISA. But if you've had interest on a bank account or some other savings account, that needs to go in here. You need to tell them how much interest you've had and if you've paid any tax on it. In questions 8 to 10, you tell them about your state pension, and in questions 11 to 12, about any company pension you've received. And in both of these cases, you should get a form from the pension provider telling you exactly how much money you've received during the year and how much tax has already been taken off. And if you're on benefits, you need to tell them about, for example, employment support allowance at question 13 and job seeker allowance at question 15. Now, some benefits are taxable and some aren't. And on our website, in that collection of documents, you'll find another one that will tell you about all the benefits that are taxable. So if you've received other benefits over the year, check out that list and make sure you answer the relevant questions here in the middle of this page of the form. On page 4, we're looking at tax reliefs, and for a lot of people, this won't be relevant at all. It's about payments into particular forms of pension savings, charitable giving, and blind person's allowance. We mentioned earlier that for both this main form and for the self-employed pages, there are guides that HMRC publish. So if you think any of these apply to you, do get hold of that guide to the main tax return that you'll find on our website and check out what you need to be entering here. Page 5 takes us on to any student loans that you might have had and information if you're receiving child benefit and are on a high income. Again, most of those won't apply to people, but the one at the bottom might be useful if you're married and your partner's working. If your earnings are less than £12,500 last year, then it's possible that you could transfer some of your tax allowance over to your partner, which would mean that they'd have to pay less tax. On page 6, you have to declare any tax-free funds you've had during the year. And again, an important bit at the bottom of the page, you can put in there your bank details if you'd like HMRC to repay you for any overpayment of tax directly into your bank account. Otherwise, they send you a check. So to not be bothered faffing about with checks, just give them the details there. If you're not sure about whether you think you've overpaid, it's always worth putting them in. You can't lose anything by doing that. Page 7, here you put in the details of an accountant or other tax advisor if you've got somebody like that working for you. And there's a big box at the bottom there where you can write in anything else that you think might be important to help HMRC understand your earnings, income, and tax affairs during the year. Again, the chances are most people won't be entering anything there, but if there is anything particular, that's the place to pop it in. And now on to the final page. Again, we tell them that we're including supplementary pages, which we'll come on to with the next slide. So we put an X in box question 21, and then make sure that you sign in the signature box and date it at question 22. Now we're moving over to the self-employment return. And this is only 2 pages long, but it's really the important bit where you need to tell them the details about your self-employment. So again, if you're doing the paper version, you need to repeat your name and your UTR at the top of the page. Tell them a bit about what your business is and where you're working from. If you started the business during the tax year or the business ended during the tax year, then you need to put that information in questions 5 or 6. And at question 7, you tell them the date to which your accounts are made up. Now we know the tax year ends at the 5th of April, so you could put that date in. But if you're keeping your own books, you might be doing it on a monthly basis. And the 5th of April would be in the middle of a month, so a bit tricky. So you can use the 31st of March as your date that the books are made up to. And if you do that, then you can use the months that you've been recording your income and spending on, tot it all up, and say that your accounts are made up to the 31st of March. Just remember, if you're doing that on a consistent basis, for the next year, your accounts need to start off from the 1st of April. You can't miss days out, but it can be a lot simpler if you use the 31st of March. So that's an option. Another important question is the next one, question 8. which is about whether you're using what's called cash basis. Now, most people who are self-employed and have simple accounts will use cash basis. What that means is you're reporting on your accounts on cash coming into your business and cash going out of your business. The alternative, which is traditional accounts, are based on invoices. So with traditional accounts, you add up all the invoices you've issued to customers, and you add up all the invoices you've received from suppliers and declare those. And you can understand that there's a bit of a difference as you get towards the end of the year, because you might issue an invoice in March, but it might not get paid until the end of April, in which case there'd be a difference. With traditional accounts, you'd be writing that in one year's accounts. In cash basis, it would be in the following year. Cash basis tends to be a lot more straightforward, so we're going to assume you're using that. But just check if you've got complex accounts, and if you're using an accountant, you might be using traditional accounts and invoice-based accounting. So if you're using the cash basis, put a cross in question 8. And now we get to the meaty bits. At question 9, you write in what's called your turnover. And this is all the money that's come into your business during the year. And that could be from sales that you've made, it could be from fees that you've been paid. Add it all up, and the total to the nearest pound goes into box 9. And the next important bit, and in some ways even more important, are the expenses that you've had, what you've spent in the business. And we'll say more about what counts and what doesn't in the next few slides. But you can declare those expenses in each of the boxes, separating out your expenses into different categories. But you don't need to do that. If you want, you can just total them all up and put that total in question 20 at the end. Now, if you do the online return, that tends to reverse things. They offer you the chance to put in the total, but if you want, you have the option to do it box by box as it's laid out there in the different categories on the form. Obviously, the total is a lot simpler, and most people just use that. So, self-employed expenses. This is really important, and we'll reiterate it later, but the tax that you might have to pay is all based on your profits. It's not based on the income in the business. It's the income less all the money you've had to pay out your expenses. So it's really important that you don't neglect any expenses that you could be claiming, because it might mean that you're paying more tax. So a very crude but quick rule of thumb is basically, if you've had to spend money as part of your business, you can claim it as an expense. Now again, there's a detailed guide from HMRC that's on their website and is in the bundle of documents that we've put on our site. You can find a direct link there to the website from that address on the slide. So, as you might expect, things like stationery, your phone bills, your business cards that you've bought, insurance that you've had to take out, any raw materials that you've had to buy in, all those sorts of things are business expenses, and you can claim them against your income. There are, though, a few things that you can't claim as an expense, and the most obvious one is what you've paid yourself. Sometimes, for the self-employed, it's referred to as drawings. So you need to keep the money that you've paid yourself out of the expenses list. Some other things that don't count are if you've bought business premises, traveling to an office if that's your normal place of work. Thinking of traveling, you can't claim for fines. So if you do get caught for speeding, I'm sorry, but the fine can't be paid as a business expense. You can't claim either for ordinary everyday clothing. If you have to wear special clothing in your job or a uniform, you can claim that. But if it's just everyday clothes, you've got to foot the bill for those. You can't take them as a business expense. And the other one you can't claim for is when you're entertaining customers. So again, just to be on the safe side, check out the guidance and make sure you've got it right. One tricky bit when you're looking at expenses that can come up is where you're using something both in the business and for personal use. And obvious examples are things like your mobile phone and the car. You can only claim the expenses that relate to the business. So for example, if you'd got a mobile phone and you used it half and half for business and personal use, you can only claim half of the payments you've made for that phone. So you just work it out roughly and tell them how much has been used on business purposes. Now, in terms of the car, that's one of the things where you can make life a heck of a lot easier for yourself. HMRC allow you to claim what are called simplified expenses. And at the bottom of the slide there, you'll see a link. Again, there's a guide to this stuff. So if you've not got all the details nailed down here, just check out the simple guide that they provide. The main expenses are car travel, and for most journeys and people, that'll be 45 pence a mile. So instead of working out how much you've spent on petrol, new tyres, getting it serviced, the tax, and so on and so forth, you just count the miles you've done on business and multiply it by 45p. That's your car travel expense, and you can put that as an expense on your tax claim. Similarly, if you work from home, if you do enough hours, you can claim help towards the cost of the extra electricity, gas, and everything else that you're using up. So make sure you get those expenses claimed. Now let's move on to the second page of the self-employed return. On the previous page, you said how much money had come into the business and how much you'd spent as an expense. On this page, you work out the difference. If you were fortunate enough to make more money than you spent, you made a profit, and you put that profit in at question 21. Or if you were unfortunate enough to have made a loss last year, that goes in box 22. And when you do the online return, these sorts of things are worked out for you automatically, so you don't have to be doing the calculations. The next set of boxes relate to what are called capital allowances. These are allowances for buying big bits of kit, which are going to last years and years typically. Now, if you're using the cash basis that we mentioned before, the simple way of doing self-employed accounts, a car purchased for the business is the only possible capital allowance that you can claim for. Again, look at the guidance if you think that applies to you, because capital allowances are quite complicated things to deal with. Fill in the other boxes, and chances are most of them will be zeros, and you'll keep repeating those profit or loss figures as you come to the boxes further down the table, such as in question 28 or question 31. Now, the bit at the bottom might be important. If your profits at the end of the year are less than £6,365, you won't be paying national insurance contributions. And that can be a problem because it affects your entitlement to state retirement pension. You have the opportunity here to put a cross in a box to make voluntary national insurance contributions. So the big question is that worthwhile? Well, use the link there on the slide to check out whether you think you're going to hit the number of years you need to get a full pension, and that's 35 years. If you're going to fall short of that number, it may be worth your while making voluntary contributions at this point in time. So check your record. If you think it would be useful to you, put a box in it, and HMRC will come back and ask you for those voluntary contributions. But they're not necessary if you're above that threshold and going to be paying national insurance anyway. We've gone through now the paper returns. If you want to get a better handle on doing the online return, have a look at this video from HMRC. You can break off now from this video that we're doing and from the PowerPoint slides if you want. The next couple of slides are just going to be looking forward rather than dealing with your tax return. So it's a very quick and straightforward video, and if you're uncertain about doing an online return, I'm sure it will help you. So now we're looking forward. We're almost at the end of this presentation. As I mentioned before, key point, tax and national insurance are based on your profits. Now, if in the current year you think you're likely to make a profit, you really want to also think about putting money aside to cover the tax and national insurance that you might have to pay at the end of the year. If you follow the link on the slide there, it'll take you to a calculator where you tell the website how much you think you're going to be profiting each week or month, and it will tell you how much they think you're going to have to pay in tax and national insurance. So it's really useful to make sure you don't get caught out at the end of the year. And just to give you an idea, income tax you'll normally only be paying when you get above the standard personal allowance, which at the moment is £12,500. If your profits, and remember it's profits not income into the business, if your profits are above that but below the 50 grand limit, they'll be taxed at 20%. The thresholds for national insurance are a bit different, and there are two kinds of national insurance you might have to pay if you're self-employed. One is a flat rate of £3.05 a week if your profits are over £6,475, and a percentage, in fact 9%, if your profits are £9,500 or more. If you're in the fortunate position where your profits are over 50 grand, then there are higher band rates applicable there. So if you're one of the lucky ones, go and check out the details. So that's the end of the presentation. I hope that's been useful. Do get back to us and tell us if it has been useful, how we might improve it, and if there are other videos you'd like to see us putting together. If you've got any queries, do get in touch with us. The email addresses for myself and my colleague Paul at Cloud Enterprise are there on the screen. Hope to hear from you soon, and thanks for watching.